Hi and welcome to the Market Alert for Wednesday, the 20th of January 2021. So today, of course, is the inauguration of Uncle Joe. That's the first and foremost. I'm not going to bring up any graphics for that. Let's just deal with the financial side to begin with. So again, the warnings are there, signs of exuberance, unlike 1998 under Greenspan, where he talked of irrational exuberance. Look, we all know that the market's way overvalued and it's due for a correction, and the implied volatility is indicating that as well. We didn't think traders could get any more speculative than they were at the end of August, and we were wrong. And then the main news is about the ladies today. This one to start with, Yellen. It is like Back to the Future. And as I keep saying, it's Obama 2.0. And she's been talking already, testimony in front of as the Treasury Secretary designate in front of the Senate. Interestingly enough, she was paid $250,000 for after-dinner speeches during the last 4 or 5 years. So she'll be sitting pretty for that, whatever information is disclosed to the bankers. So, she's back, and you'll see here, Yellen, go big, narrative sparks, big tech, bond, bullion, and Bitcoin gains. Damn it, Janet. As I said, she'll be opening the checkbook as soon as she can. She's taking over from the Munchkin, who was a former Goldman chap. So again, it all remains in place. Watch live. Janet Go Big Yellen cheerleads Biden fiscal largesse in nomination hearings, meaning generosity, of course. Well before COVID-19 infected a single American, we're living in a K-shaped economy. Absolutely. So, she's there again. The dollar's screaming its way to zero. But it doesn't matter. Just keep printing the money. And another criminal, Lagarde. I've said a long time that they've got yield curve control, because I actually tracked the 2-month and 10-year, and I've done for a long time, because it indicates with 100% accuracy whether there's going to be a recession or not. And that has been sitting really steady around the 1% level for a long time. It's just not as explicit as the Japanese do it, but broader. Once it's out that you explicitly control the yield curve, this commitment can be very expensive. And the reason it's very expensive is because you have to print more money to try and keep the interest rate down. That's what they're talking about, yield curve control, is to stop the rate from moving higher, because it increases the payments on the interest on the global debt, and obviously the country's debt as well. So back to something a bit more interesting. The implied volatility is still below the 20-bar moving average there, 1803. Like I say, it's all indicating for a correction. It'll be interesting to see once Uncle Joe's in over the next 24 hours how the markets then start to react. And news today, of course, is tentative that Biden speaks. I don't know why he's tentative. Is he's not going to turn up or something? But it's 2 p.m. I think it all kicks off at around 2 p.m. GMT today. And then also where we've got Bailey speaking as well. Now, yesterday I didn't record the session for some unknown reason. Hit the button, didn't work, but to be honest with you, not a lot happened. So let's, as the market waits for Joe's inauguration today. So let's start off with the Dow and have a look at the daily. So you can see the market started to move higher and then sold off, and you can see their prices sideways. And like I say, for me, I think there's going to be a situation where we're going to see a correction coming into this market. So anyway, they're going to be able to print trillions is by actually sending the market down again, creating a catastrophe and chaos, because that's how they manage to print such large amounts, because it's a problem, reaction, solution. They create the problem, they get the reaction, then they provide the solution. So it'll be interesting to see what happens there. Let's just move over to the German DAX and have a look at this as well. And you can see this also coming off the highs, closing back below the 5-bar moving average yesterday. It did trade up to the 62% retracement there, but then hit a brick wall and then started to move lower. Now here, what I would do is we've got this area here and here that have been left behind the latest two swing points. So from this low to here, I'll be looking to see where the market's going to pull back to. Now we've got a sort of fib retracement within a fib retracement, because we've got from here to here and here to here as well. I mean, you could always come back to this point as well if you wanted to, but to be honest with you, this is the last one that's left behind. I want to see how much support the market can find at the 20 bar moving average and what it is as a percentage here. We've got a 62% retracement there. So again, you see how quiet it's been with the volume as well. So yeah, let's just have a look at yesterday. I mean, in the morning session, the market sailed to the downside, started off selling, broke the 200 MA and then stayed below the 20 bar moving average until around 9:30, and then the market started to move back to the upside. So there was just a slow drift down. There was no big sell-off. It was just a really choppy way of moving the market to the downside there. And then in the afternoon, again, we had the same thing where the market at the 200 MA once more sold off, and then prices moved lower. We had a double bottom here where you've got the market coming down, and then you see the spike in volume there saying, right, okay, that's enough, and they start to bring the market back. Came back to the BRN, which you can see there, which is 850, and then once we close back through with selling just after 4 p.m. there, send the market back down for a triple bottom there that you see before prices overnight have started to move to the upside above the DP early on there, and moving up. This is in the evening session. This is the overnight session. Weakness coming back in again. Prices back below the DP straight away, which you can see there, and then closing with selling volume there through the 200 MA as well, and continuing lower, as you can see there, all the way down to yesterday's low. And what have we said about the low? They want to get the market off the low if they can, and that's precisely what they've done. They brought the market back up to the 200 MA, so I suspect that they will try and bring this and allow this to continue to the upside as well. So that's about it. Like I say, be interesting to see how the inauguration goes. I hope Trump hasn't got anything else up his sleeve, but who knows? In particular, let me just drag this in for you. I did notice this headline, considering it's going to be a virtual inauguration because they can't invite everybody because of COVID, or open it up like they normally do and have, tens of thousands of people. This seems to be a little bit over the top, but yeah, so who knows? We'll see what happens. Okay, that will do it for this one. I know it's brief, but like I say, the markets have been waiting for Uncle Joe, and hopefully now once he's in office we can get some volatility back in the market and a good correction as well, and some good trades. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.